Assalamualaikum. We continue with the, the next part of intangible assets. Let's talk about impairment of intangible assets. It's the same concept as what you have learned in impairment of fixed assets previously, in your intermediate accounting 1. Yeah? So impairment is basically the decline in the value. Yeah? Let's say you have a handphone after you purchase in 2020. In 2021, the value of this handphone will reduce. Yeah, so that means the handphone has been impaired. Yeah? The value has been reduced because there is a new handphone in the market, and so this handphone is not really marketable anymore, yeah, compared to the new series offered by the smartphone companies. Yeah, so the same thing like intangible assets. Yeah, so an asset is considered impaired when we cannot recover the original value of this asset. Yeah, let's say we purchase for 5 million of this handphone, 5 million rupiah, and later on, after 1 year, its value is no longer 5 million. Maybe it becomes 3 or 4 million. Yeah, so that means the original value or the carrying value of that asset is no longer the same in the market. So the same rationale applies for intangible asset. Yeah. And the procedure for recording impairment, it depends on the kind of intangible asset, whether it is limited life or indefinite life, which includes the goodwill. Remember, indefinite life may include the trademarks. Yeah? Limited life, it could be other intangible assets like copyrights or franchise, yeah, anything that has a useful life, yeah, the duration of such asset. Yeah. Like I said, the impairment procedure is the same like for fixed asset or tangible asset. Yeah? So we compare the carrying amount and recoverable amount. Recoverable amount must come from the higher of fair value less cost to sell or value in use. Yeah? Value in use is the discounted future cash flow of the asset. Yeah? Fair value is basically the market value we deduct with any possible cost that needs to be incurred if you want to sell such asset. Yeah, let's say this handphone, you want to sell it. Yeah, what is the fair value currently? And then if you want to sell it, maybe you need to change certain things in the handphone. So that is the cost to sell the asset. Yeah? Okay, so value in use is the present value of cash flows expected from the future use and eventual sale of the asset. Yeah? That you will learn in financial management. Yeah? How to discount the future cash flows. Yeah? Okay, let's say in this example, the company has a patent carrying value of 5 million at the end of 2018. Unfortunately, several recent non-shale oil discoveries adversely affected the demand of shale oil technology. Yeah? So it indicates that the patent has been impaired. Yeah? And the company determines that the recoverable amount based on value in use is 2 million, yeah, based on the discounted expected net future cash flows. So we know the carrying amount is 5 million, and then recoverable amount, we only know value in use of 2 million. So we just take that value. We cannot compare with the fair value less cost to sell. Yeah? So when we compare, the recoverable amount is lower than the carrying amount. That means there is an impairment. Yeah? If the carrying amount is lower than the recoverable amount, that means there is no impairment. Yeah? coming back to the example of a handphone or your smartphone, if your carrying amount is 5 million and then you identify from the market the recoverable amount or the market value, if you use the fair value here, is actually 5 million as well. So there is no impairment. But if it is lower than your original price value, that means there is an impairment. Yeah. So how do we record the impairment in this case? We would record loss on impairment, the difference between 5 million and 2 million, which is 3 million. And we will credit patterns. Yeah, we will reduce the value of that asset, yeah, which was originally 5 million. We want to make it 2 million. That's why we credit 3 million. Yeah. Okay, let's say like fixed asset as well. After we record impairment loss, suddenly the asset has increased in its value. Yeah. Let's say for the pattern just now, suddenly there is an increasing demand for the oil technology. Yeah. So it indicates that the pattern has also increased in its value. Yeah. Going back to the example of a smartphone. Yeah. Let's say your handphone, after certain years, it becomes an antique product, yeah? A unique product that is demanded by the market. Yeah? So the price of your smartphone suddenly increased from the original, from the previous carrying value after impairment. Yeah? So I just want you to rationalize in daily example. Yeah? How do you understand the impairment and the reversal of impairment loss? Yeah? So let's say in this example, the company has already recorded amortization expense, and then by knowing the amortization expense, then we can identify the carrying value over the 5 years. Yeah? And then suddenly, early in 2020, the company identifies that the recoverable amount of the patent is 1,750,000. Yeah. Okay, going back to this. Early 2020, the carrying value is 1,600,000. Yeah, you take from the ending value of 2019. Yeah, this is 1.2 million is the carrying value at the end of 2020. Yeah. So the carrying value is 1,600,000. Now the recoverable amount is higher, which is 1,750,000. So basically, we have a higher amount of recoverable value. That means there is an increase of value of this intangible asset. Yeah? So to reverse the entry, previously we have reduced the patent value. Now we have to increase back the patent's value. To reverse the entry, we identify the difference between the carrying amount and the recoverable amount, which is 150,000, and we debit back the patents, yeah, to reflect the value of the patent of 1,750,000, yeah. And then we credit recovery of impairment loss of 150,000. Yeah. Okay, that was the tangible, definite life intangible assets. Yeah. Okay, what about impairment of indefinite life intangibles other than goodwill? Yeah? We talk about other asset except goodwill. Okay. Same rules apply for impairment tests. Yeah? Either definite life or indefinite life, we must still test the impairment every year. Yeah, because we don't want to overstate our asset. Yeah, that's why every year we have to test whether the value that we record is actually reflecting the market value. Yeah. So the same test is the same impairment test procedure applies to the indefinite life intangible assets. Yeah, we compare the carrying value and the recoverable amount. If recoverable amount is less than the carrying value, means there is an impairment. Yeah. Let's say for this example, the carrying value of broadcast license is 2 million, but recoverable amount based on fair value less cost to sell is 1.5 million. Yeah. So the recoverable amount is lower than the carrying value, means there is a loss on impairment of 500,000. So how do we record again? We record loss on impairment just now, okay? And we credit the asset itself, which is the broadcast license. The same thing like you did for patent just now, yeah? For the definite life intangibles. Yeah? Okay, the same principle also apply for impairment of goodwill. It must be tested annually, yeah. And if we can identify specific cash generating unit within the company, then we have to test based on that unit. Okay, let's say the company has several departments, and we can identify that the goodwill can be divided between certain departments that generate the cash. So we must test separately for each identifiable department or unit. Yeah. Okay, recoverable amount for goodwill, because we are not selling the goodwill, so we do not know the fair value and less cost to sell. Yeah, so we for goodwill we only can estimate the value in use. Yeah, it's nearly impossible to identify the fair value of the goodwill and some more the cost to sell the goodwill, because remember, goodwill is only generated when there is a business combination or when there is a purchase transaction from one company to another company. So it's not basically traded, yeah, unlike other assets. Yeah, the goodwill is not traded. Yeah, okay. So only value in use that we can identify from the goodwill. Yeah. Okay. The different concept for goodwill impairment loss, that it is not allowed to reverse the impairment loss of goodwill, unlike other intangible assets. Yeah. Because why? It's impossible, just now I said, to identify the fair value of the goodwill. So how do we know that there is an increase in the value of goodwill? Yeah? So we cannot do the reversal of impairment loss for goodwill. Yeah? So let's say in this example, the recoverable amount based on value in use estimate, I need to emphasize again, is sometimes we cannot identify both values, yeah, the fair value and value in use. Yeah? So we just take one of the values that is available. Yeah? So the carrying value is 2,400,000. The recoverable amount is 2,800,000. So is there any impairment in this example? Basically no impairment, because recoverable amount is higher than the carrying value. Yeah. But let's say the recoverable amount now is 1,900,000 instead of 2.8 million. So now the recoverable amount is lower than the carrying amount. It indicates that there is an impairment, yeah, of 500,000. 2.4 minus 1.9. So how to record again the impairment? We debit loss on impairment and we credit goodwill. Yeah. So basically, it's a simple journalizing transaction of the impairment. Yeah. So if there is a loss on impairment, we debit loss on impairment and we credit that specific asset. Yeah. if except goodwill, other intangible asset, we can do the reversal entry when there is an increase of recoverable amount. Reversal entry, then we debit the asset itself and we credit the recovery of impairment. Yeah. Okay, now moving to how to do the presentation of intangible assets on the financial statement. Yeah, on the statement of financial position, the companies must report separate item all intangible assets other than goodwill. Yeah, so you will identify intangible assets, one item in the statement of financial position, and another item is goodwill. So goodwill is not mixed with the rest of intangible asset. Yeah. And the reporting is similar to reporting the fixed assets, property, plant, and equipment. You will deduct the accumulated amortization expense. Yeah. But for intangibles, we don't normally show that contra account accumulated amortization, but it is shown in the notes to the financial statements. Yeah. So in income statement, we will identify the amortization expense and then how much the impairment loss and reversal on impairment loss. Yeah. And the notes to the financial statements basically must include the details of amortization expense for each type of asset. Yeah. Okay, let's say for this Nestle company, the example in the income statement, it would present the amortization expense and impairments of goodwill. Yeah. On the statement of financial position, it would have goodwill and then intangible assets. Yeah. So we split the whole intangible assets into two main categories in the statement of financial position. The goodwill must be separately disclosed or presented on the statement of financial position. And other types of intangible assets, it will be combined together under the title of intangible assets. Only in the notes to the financial statement that it will be shown for each specific type of intangible asset together with its amortization expense. Yeah. Okay, now we discussed a little bit about research and development costs. Like I explained in the beginning of the lecture on intangible assets, normally for the company to get the patents, to get the copyright, it would incur the research and development costs. Yeah? The basic rule of research and development costs is to expense all the costs associated with R&D, except when it has reached the economic viability stage, yeah, or any research and development cost that will be utilized for the future projects. Then only we capitalize those costs, yeah. But the basic rule is to expense it, except when we feel that we have reached the economic viability stage. Economic viability stage means that we can foresee or we can identify that the product will generate the cash flow or the economic benefit to the company. Yeah. Okay, the drugs company and technological related companies are very much involved in R&D costs, yeah, because they always try to produce something new, new product, new process, new formula, yeah, or idea or prototype. Yeah? Okay. If you can see here, basically the technological company like electronic related company like Samsung, Intel, Microsoft, yeah, Google, Amazon, they are spending a lot on research and development. Yeah? Also, the drugs company like Johnson and Johnson, they also produce the sanitary products, yeah? And the car companies, yeah, they're involved in always trying to create a new car with a new technology and new offerings, yeah. So they are very much involved in research and development course, yeah. So like I said, research and development costs must be expensed as incurred, but when we reach the development stage and we have reached the economic viability stage, then there is certain cost that needs to be capitalized. Yeah? When we assume that the project is economically viable. Economically viable means such project is believed to be able to give the economic benefits to the company, because some projects may not be able to reach the economic viability. Yeah? After they do the research, suddenly they have to abandon that project, yeah, because it doesn't seem to produce something that can give the cash flow to the company, yeah, or it's not successful, basically, such project, yeah. Research is, I believe that you understand what is research is, the original, the investigations towards certain process or result that we want to gain, yeah, a new scientific knowledge, laboratory research, even the research conducted at the university, yeah? Development when we start to put it into something feasible, something that can be seen and like product, or it can be seen the process already, it can be applied, and the design, it can be seen the design, yeah? Okay, accounting for R&D activities. Mostly the costs that are incurred during the R&D activities, among others, are materials, equipment, facilities, personnel costs, yeah. Even purchase intangibles if we need to purchase certain pattern first from other company, maybe because for us to embark a new project, maybe we need the pattern from other company, yeah. Contract services, other indirect costs, yeah. Okay, let's say for this example, construction of a long-range research facilities for use in current and future projects. When it says it is for future projects, mean we have to capitalize such costs, yeah. Okay, let's say number 2, acquisition of R&D equipment for use of current project only, means we have to expense it, yeah. Current, number 3, for current and future R&D means it has to be capitalized, yeah. So that's among others the keyword, yeah. If it is used for long term, then we have to capitalize such costs, yeah. Try to do the rest of exercise on yourself, yeah. Okay, there are other costs that are similar to R&D, yeah. For example, startup costs for a new operation, yeah. Let's say Indo Food Company is exploring a new market in South Africa, yeah. So to start a new operation in South Africa, Indo Food Company from Indonesia, they need to go there, yeah? They need to send a team to South Africa, yeah, to identify the market and the production facility, maybe where do they want to set up their production facility, what are the costs that needs to be involved, yeah? So those are the example of startup costs, yeah, when they want for the company to embark a new operation, yeah. Those startup costs needs to be expensed as incurred, yeah. Okay. Another cost similar to R&D is initial operating losses, yeah? It's very common for the new companies. Yeah? When they start a new operation, they would incur the losses. Yeah? It's quite rare, it's very rare that a new operation will immediately generate the revenue. Yeah? Or the profit, I mean, not the revenue. Of course, they would generate revenue, but they have so many expenses to incur in the beginning of operation. So that's why they have normally operating losses. Yeah. That operating losses, some people debate that it needs to be capitalized, but the IFRS determine that it needs to be expensed immediately. Yeah? Even advertising cost also needs to be expensed. Yeah? Despite sometimes the company incur very huge, very high advertising cost. Yeah? It cannot be capitalized. Yeah? You try this example on how to compute the R&D cost. This example of GlaxoSmithKline. GlaxoSmithKline is the drugs company, GSK. Yeah? If you notice, many medicines are actually patented from the GlaxoSmithKline. Okay, so that's all our topic for intangible asset. I hope you do your assignment and read the topic and consult with me whenever you don't understand. Okay, thank you so much. Wish you